Welcome to a new video where we analyze market behavior through dynamic charts that make it easier to understand what is happening in the stock market. Today, we will explore how Meta has managed to increase its average revenue per user thanks to artificial intelligence and what impact this has had on its business model. The dynamic chart you will see throughout the video is generated from the image displayed on the screen. As we move forward, we will see how Meta's key figures have evolved in the last quarter and what factors have driven this growth. Meta, the parent company of Facebook, Instagram, and WhatsApp, has been at the center of attention due to its aggressive investments in artificial intelligence to improve its advertising business. In the last quarter, the average price per ad on its platform increased by 14% compared to the previous year. This has led to a 15% growth in average revenue per user, reaching $14.25. But how has Meta achieved this growth? The key lies in two factors: its machine learning system called Andromeda and the Advantage Plus solution. Both tools have enabled the optimization of advertising campaigns, automating processes, and improving the effectiveness of ads. If we look at the dynamic chart, we can see how Meta's ARPU has fluctuated over time, but the trend in recent quarters has been clearly upward. This growth not only reflects the effectiveness of its new strategies but also the confidence of advertisers in its platforms. To better understand the importance of this growth, it is useful to recall how digital advertising has evolved. A few years ago, companies largely relied on static ads with basic segmentation. However, with the advent of machine learning, personalization and automation have become fundamental elements to maximize return on investment. The case of Meta is interesting because, despite the challenges it has faced in terms of regulation and competition, it has managed to position itself as a leader in digital advertising. Its partnership with NVIDIA to develop Andromeda has enabled its platform to process enormous amounts of data in real time, optimizing ad delivery and improving advertiser conversion. Additionally, it is important to highlight how Meta has leveraged its app ecosystem to maximize ad impact. With a user base of billions of people, the company has access to an immense volume of data that allows it to continuously improve its segmentation and prediction models. This has been key to its success in the advertising field. Another relevant aspect is Meta's transition towards the metaverse. Although a large part of its revenue still comes from social media advertising, the company is strongly betting on virtual and augmented reality. As this technology advances, we could see an evolution in how ads are presented and consumed in virtual environments. The use of artificial intelligence in advertising is not exclusive to Meta. Other major companies like Google and Amazon are also investing in similar technologies. However, the key difference is the integration of Andromeda and Advantage Plus within Meta's ecosystem, allowing them to offer a more optimized and automated solution compared to the competition. One of the risks Meta faces in this business model is government regulation. In recent years, we have seen how privacy policies have affected data collection on digital platforms. The implementation of stricter regulations could limit Meta's ability to personalize ads, which would directly impact its ARPU. Another factor to consider is the impact of changes in consumer behavior. While digital advertising continues to be a growing sector, users are increasingly concerned about privacy and the number of ads they are exposed to. Meta will need to find a balance between maximizing its advertising revenue and maintaining a positive user experience. This increase in ARPU not only benefits Meta but is also a key indicator for investors and sector analysts. A company that manages to increase the value it obtains per user demonstrates that its platform remains relevant and competitive in an environment where digital advertising is constantly evolving. However, competition in the sector is fierce. Google and Microsoft are also aggressively investing in artificial intelligence to improve their advertising products. This raises the question of whether Meta will be able to maintain its leadership or if it will eventually face greater market pressure. If we look at the chart again, we can see that, although growth has been steady, there are moments when the curve slows down. This shows us that despite Meta's success, it still faces significant challenges, such as changes in user privacy and new regulations that could affect its business model. To put it in perspective, let's analyze other strategies that technology sector companies have used to maintain their growth. A key example is Amazon, which has managed to diversify its revenue not only with digital advertising but also with its e-commerce platform and cloud services. This has allowed it to maintain a competitive advantage over its rivals. Additionally, it is interesting to note how advertisers are diversifying their advertising investment. While Meta remains a dominant player, other platforms like TikTok have emerged as viable alternatives, especially for younger audiences. Meta's ability to continue attracting advertisers will depend on its capacity to innovate and offer effective advertising solutions. The role of artificial intelligence in digital advertising will continue to evolve. While it is currently used mainly to improve segmentation and automate campaigns, in the future, we could see even more advanced applications, such as the automatic creation of content optimized for each individual user. We cannot ignore the impact of macroeconomic trends on the advertising sector. Factors such as interest rates, inflation, and global economic growth can influence companies' advertising budgets. While Meta has proven to be resilient to these challenges, it remains a key aspect to monitor. Finally, the future of the metaverse and its integration with digital advertising remains uncertain. Although Meta has invested billions in this technology, it is still unclear whether it will become a revenue source as lucrative as its traditional platforms. The mass adoption of the metaverse will be a decisive factor in determining the success of this long-term strategy. Furthermore, we must consider the development of AI-driven advertising tools that could reshape the industry landscape. If Meta continues investing in machine learning and automation, it may be able to refine its ad targeting and optimization capabilities beyond its current achievements. Additionally, Meta's partnerships with hardware companies developing augmented and virtual reality devices could further enhance its advertising reach. The seamless integration of ads into immersive environments could open up new revenue streams and redefine how consumers interact with digital marketing. Another key aspect to observe is Meta's ability to balance growth with ethical concerns about AI and data privacy. Increased scrutiny from regulators and users could force the company to be more transparent about its AI-driven advertising strategies, which may impact the speed of its technological advancements. In summary, the increase in ad prices and the growth of Meta's ARPU reflect the positive impact of its investment in artificial intelligence. With tools like Andromeda and Advantage Plus, the company has managed to improve the efficiency of its ads and increase its revenue per user. However, competition in the sector is intense, and the coming quarters will be key in determining whether Meta can continue to maintain this advantage. If you enjoyed this analysis and want to continue exploring the future of artificial intelligence in the market, I invite you to watch our latest video where we analyze whether Google can outperform Meta and Microsoft, considering the capex it is currently allocating to invest in AI. Don't miss it, and see you in the next video.